It's a lovely day in Istanbul. It's Friday, and welcome to Real Turkey channel. I'm your regular presenter and host Atilla Yeşilara. Today I want to talk about Erdoganomics, which is the economic policy set that's being deployed by Mr. President and his advisors, and I'm going to claim that it is Turkey's number one economic problem. Erdoganomics is really a very bizarre animal. It doesn't fit any of the known schools of economic thought that are currently in use on this planet. I don't know what they do on Mars or on planetary bodies in other star systems where it might be adopted, but in Turkey it's not producing any results. So before I explain what Erdoganomics entails, and it's quite a wide body of literature about Erdoganomics, it's a well-established theory, though it's completely based on wrong premises. I want to explain how it's destroying the Turkish economy, and more importantly, Turkey's democracy and institutions. By 2012, per capita GDP in Turkey was roughly $15,000. At the end of 2019, that fell to less than $10,000 per capita. And the reason is not because our population have increased very rapidly. The reason is because misguided and extremely myopic economic policies have been employed. Moreover, this year, Turkey is going to shrink 5% according to IMF forecasts, a forecast with which the economists I'm familiar with agree. And in 2021, there would be a shallow recovery, probably to the tune of 3.5%. Now, on that, I don't agree with anyone. I think Erdoganomics has made the Turkish economy sick. It is unable to recover, and the best we're going to get in year 2021 is 2% inflation. But that's not Turkey's only problem. As of June, Turkey had a CPI inflation rate of 12.65%. We are one of the very few nations, emerging nations or developing nations across this planet again. I don't know. It might be different on Mars, as I've said. I haven't really looked into Martian economics lately, which have such a high level of inflation. Well, obviously, Venezuela is an example, which is going through severe economic turmoil. And at times, some countries, because of changes to terms of trade or natural disasters or policy shocks, would have temporarily double-digit inflation. But otherwise, with the exception of a few African countries, double-digit inflation has disappeared. Turkey is the only living remnant of double-digit inflation countries. And that's, again, because of Erdoganomics, because Mr. Erdogan firmly believes that higher interest rates lead to higher inflation. In other words, he's turning accepted monetary policy heads up or on its head. The reasoning usually goes from interest rates to inflation. In fact, anyone who follows what Fed or European Central Bank or the Swedish bank does knows that if inflation rises, then a nation fights that by tighter monetary policy. We do exactly the opposite. The third problem is the chronic current account deficit. Turkey is a savings short country. Actually, I don't quite agree with the view that Turks save less than any other nation around their income level. It is just because of, again, Mr. Erdogan's policies of confiscation and neglecting rule of law. The trust in the financial system has depreciated substantially. So Turks save less through financial instruments and more through real assets and just cash hoarding. Turks are notorious buyers of second homes, summer cottages, as well as holding, as the Turkish saying goes, under their mattresses, probably up to $60 billion worth of dollars and euros in banknotes, as well as physical gold. Because Turkey is a savings deficit country, any policy attempt to stimulate the economy always creates current account deficits. And these current account deficits are no longer financed by foreign flows because, again, Erdoganomics made it impossible for foreigners to invest in Turkey either through financial markets or through foreign direct investment. And as a result, Turkey's central bank has one of the lowest FX reserve ratios compared to Turkey's annualized foreign debt payments. Moreover, Turkey is becoming a notorious liar when it comes to official statistics. There are very strong suspicions that inflation data is suppressed or tampered with, and everyone knows, talk to any economist who has done any work on Turkish economy, they will tell you that the central bank window dresses its reserve numbers. It has no net FX reserves left. It has this Qatari swap worth $15 billion, but it is in Qatari currency, so it has no liquidity. It has also $30 billion or so of gold hoards, which are kept in Turkey rather than in any of the other global financial centers, which makes them illegible for collateral for dollar borrowing. You don't sell gold when you need FX reserves. You simply pledge your gold assets and get a dollar or euro or Japanese yen loan. As a result, Turkish economy is a mess. And it's going to get worse because of Erdoganomics. Now, let me tell you what Erdoganomics is. From a trade and production perspective, Erdoganomics has completely missed the Ricardian revolution of economic thought. Ricardo said that countries should trade even if country A produces all the goods much cheaper than country B, because the relative cost of producing goods are different. This is sort of the basis of international trade theory. It explains why nations trade with each other, even though they can produce most of the things they need at home. It's called the theory of comparative and absolute advantage. Mr. Erdogan doesn't believe that. His views are very close to French mercantilist school, which tries to produce everything at home regardless of the opportunity cost. For instance, we're trying to build a domestic car. Roughly 94 years after Mr. Ford came up with Model T that started the auto revolution. Given that the car market is extremely crowded and there is consolidation and mergers to shrink capacity, why Turkey is trying to build its own car, I never understood. I don't think anyone understands it. It's just a very costly exercise, but the whole point is that Turkey is trying to buy less from abroad by reindustrializing and onshoring, which would make sense if we could. It's obviously there are certain areas where we can improve productivity and produce more of the goods and services that we need at home. But in most areas, such as semi-finished products, there is almost an impossibility because the companies that we buy from have developed global economies of scale, which means their unit costs are extremely low. If we were to replicate these kind of industries at home, the unit costs would be extremely high. There is no way we can compete with established spare parts companies, chip companies, etc., in terms of marketing, which means that if we were to procure our semi-finished good needs at home, then both the consumer and the producer would suffer. Enough examples of mercantilism. The second viewpoint is a very strange fixed investment theory. Now, Mr. Erdogan believes that if interest rates can be lowered, private sector would invest more into fixed assets, which is a half-truth. Clearly, interest rates do play a role in terms of investments, but Keynes has taught us that animal spirits, that is, expectations about the future business conditions, future regulatory conditions, are as an important determinant of fixed investment as the rate of interest itself. In fact, today, I think practice shows us that interest rates are not the most important variable. An even playing field for business community, the rule of law, and protection of, in particular, intellectual property rights are more important in determining the size of fixed investment. Now, for Mr. Erdogan, none of these things matter. Turkish judiciary has become captive to Mr. Erdogan's wishes. And when I say that, I don't want to blame the judiciary, because the penalty for not complying with Mr. Erdogan's requests are extremely high. The justices can be sacked, demoted, or sent to remote corners of the country to serve the rest of their careers looking into bankruptcy cases rather than criminal cases. So it's not that the judiciary or the police is voluntarily contributing to Erdoganomics, but they are forced under the threat of a big stick to do what Mr. Erdogan tells them. So, attributing the level of fixed investment to interest rates only is another mistake, which is simply not true. But it also misses another point. To invest, you need funds, either your own equity, but mostly loans. And the lower you cut the interest rate, ceteris paribus, that means all else being equal, Turks save less in financial instruments. Let me give you the most blatantly damaging, toxic example of Erdoganomics. Currently, as I've said, Turkey's CPI inflation rate is 12.6%. The average deposit rate on 1 and 3 month TL deposits is less than 8% before taxes. So in essence, the Turkish citizens are forced to lend their money to banks at the expense of losing purchasing power. Why would anyone do that? So they don't. They either invest into FX deposits, or nowadays more likely they invest into new houses, cars, and any real asset they can get their hands on. So this really strange and bizarre interest rate theory not only discourages fixed investment, but it also reduces the amount of what we call investable funds in the banking industry. I have already mentioned the fact that Mr. Erdogan is a firm believer that interest rates are evil. And I think this is largely driven by a bizarre or not commonly accepted view of Islamic monetary theory. There are certainly proscriptions, against usury in the Quran, but whether they apply to the nominal interest rate or to the real interest rate is not very obvious. And for instance, in the Ottoman era, the Ottoman emperors didn't really care much about the interest rate or whether, bankers charged interest. That wasn't an issue. To Mr. Erdogan, this is a faith. He must cut interest rates as far as possible. Another thing that Mr. Erdogan fails to understand is what we call short-term supply constraints. If you have taken an econ micro class in college, you would know that the supply curve has different shapes in short, medium, and long run. In the short run, it's extremely steep, which means no matter what the demand is, you can't increase supply too much. I mean, that's because you need to build new factories or employ and train new personnel. But if demand continues at a very high level, then of course the supply curve adjusts. It becomes more flatter over time, and eventually it becomes completely flat as more entrants into the industry build new facilities to produce the good demanded, or existing actors in the industry build larger factories or production facilities that capture the gains from economies of scale. The micro theory also applies to an economy. There is an optimal or long-term growth rate of every economy. When I went to graduate school to enjoy good beer and other substances I can't mention here, that was called the NAIRU rate of growth, non-accelerating inflation rate of unemployment or growth. It simply says that, yes, you can ramp up growth, but at some point, growth comes at the expense of inflation. Mr. Erdogan doesn't understand that. He thinks the supply curve is eternally elastic, and simply by piling more incentives on the business community or by forcing banks to loan to consumers, which would increase consumption expenditures, he can increase Turkey's GDP by 5 or 7%. Turkey's potential or non-accelerating inflation rate of GDP has various estimates, but the most realistic to me sounds like 3.5% articulated by IMF the year before. Anything above that, of course, causes inflation as well as current account deficits because Turkey is an open economy. Mr. Erdogan's attempt to boost growth immediately at any expense always leads to a boom-bust cycle. You ramp up credit, consumers purchase more goods and services, and then at some point credit runs out because it's a limited good. And then the economy slumps immediately. If you look at the Turkish GDP curve, you would see these wide fluctuations. In fact, one scholar told me the standard deviation of Turkish GDP is 3 times higher than the emerging markets average. Of course, that by itself is a reason for lower GDP growth because we live in a long-term view, for lack of a better explanation, world where businesses only invest if they can see into the future, if they can estimate or hedge about or against the conditions that may prevail 5 years and 10 years hence. Increased volatility of GDP simply means that your ability to forecast declines, its time horizon declines, and you are less likely to take up long-term projects, which is what Turkey needs. And in fact, according to the last data I have, Turkish private fixed investment to GDP ratio has declined something like 4 percentage points since 2012. I'm sorry. But the most pernicious, most damaging aspect of Erdoganomics is its complete neglect of any rules. Mr. Erdogan believes in completely discretionary government. That means he decides each day when he wakes up what laws and regulations prevail in the country. The next day, if his mood changes, well, then the laws and regulations are subject to change. There is a long-standing debate in economics whether governance based on rules or discretion produces more optimal results. I personally think that, with the exceptions like COVID-19 or a war or some kind of natural calamity, rules produce better outcomes. But doesn't matter. I think the practice is to establish rules as much as possible, but to leave some way open for discretion if a shock hits your economy. In Turkey, it's not like that. It's discretionary, and discretionary in a way that completely sweeps aside old institutions. We know that a free market economy cannot operate efficiently by itself, and that's coming from really just a bleeding heart capitalist. It needs regulatory institutions to supervise it, such as banking regulatory authority, energy markets, a medical authority to regulate the medicines that are being sold. But essentially, every area of economic activity needs to be closely monitored to make sure that actors with bad intentions don't sell shoddy products or dangerous products, or they don't use their market power to exploit consumers. Mr. Erdogan will have none of it. Turkey has over 30 regulatory agencies, but all of them have become undersecretariats of ministries. So essentially, they do what ministers tell them. But in Turkey, ministers are like bureaucrats. They come and go at the pleasure of Mr. Erdogan, so they have no real authority. As a result, Mr. Erdogan single-handedly supplanted all the institutions that make sure the economy remains on the correct path and disequilibria don't develop. As I've said, the results of Erdoganomics is complete destruction of the Turkish economy. Our foreign friends make the mistake of judging Turkish economy by the fact that it hasn't had a balance of payments crises. That's certainly one aspect to assess the performance of the economy, but falling growth rates, high inflation, sensitivity or fragility to current account deficits and to foreign flows are also important factors. Another important factor, proven by Daron Acemoğlu and his colleague Mr. Robinson, I'm sorry, I always think of Mrs. Robinson, and I can't remember Mr. Robinson's first name, but he's an outstanding scholar. These two gentlemen, well-known economists, have empirically proven that nations that adopt democratic reforms, on average and over time, grow 20% faster than those who don't. And Turkey has not adopted any kind of democratic reforms. In fact, as I've said, it has completely hollowed out its institutions, including the judiciary and the Turkish parliament. And that, to me, is the most damaging aspect of Erdogan, that people's trust in state, in law, in police, in tax authority have declined to the point that Turks are turning off from the system. The parallel economy is growing. A lot of Turks have sent their assets abroad, and Turkey's Z generation, on which we have ample surveys, want to leave Turkey at the first opportunity. Essentially, Turkey has reached a point where anyone who can get a job abroad, EU, Asia, United States, even Australia and New Zealand, would leave without gathering its luggage. This, my friends, are Erdoganomics to you. It is a set of policies that make no sense, that doesn't even maximize the profits and opportunities of those who orchestrate the system. This doesn't mean Mr. Erdogan has to go, but Erdoganomics must go, or Turkey will never grow. More damagingly, Turkey will never develop. I'm talking about sustainable human development. Turkey will remain an underdeveloped country. I intend to shoot a couple of videos on Turkey's development, institutional problems, and the Turkish wealth fund, which is another bizarre creature because it doesn't have any wealth. And I hope you will enjoy this brief series. And if you like it, please recommend it to your friends. This is Attila Eşilada for Real Turkey Channel saying goodbye from sunny Istanbul. Stay home, stay safe, and respect every creature's right to life.